Well, we're seeing quite a bit of weakness in most of the grain complex today. Now, this morning, before we even got underway, USDA said, hey, we sold some overnight grain. Actually, this time it happened to be soybeans. And what we sold was a batch of soybeans to unknown destinations. The vast majority was for new crop, but they did save about 10,200 tons of it for the old crop. The total was 229,200 tons to the unknown destination category, but did it help the market? Well, it didn't really seem to, one iota today. Market's just taking the day off, apparently. Let's look at the corn market right now. Our quotes are from bar chart, and July corn really getting weak in the knees here. We're down 17 1/4 at 783.5. December down 17 at 743 3/4. In the soybean trade, you have that July contract 4 3/4 lower now at 1673.5. That would be about 13 cents off of our overnight high. Meanwhile, November new crop soybeans, they are dropping 12 3/4 cents. They're still well above 15 bucks at 15.12 3/4. The one taking all the pressure today is the wheat. Now, of course, it had the big run up yesterday and that big reversal upward yesterday after starting out weaker. Well, July Chicago wheat is currently down 43.5 cents. We're at 12.35 after a high last night of 12.80. So here we go again with these real wide trading ranges, not quite as extreme yet. Kansas City wheat July down 50 1/4. That's 50 1/4 lower at 13.17.5. And in spring wheat today, we have July currently down 54 3/4 cents at 13.38 3/4. The cotton market has that July contract down 419 points at 144.27 per pound. December down 3.35. We're joined by Todd Bubba Horwitz of BubbaTrading.com. He's based in Chicago. But anyway, Todd, if I know you, this may not be as bearish as it appears on the surface today. We've had quite a run up here in the grain markets. Is this just maybe one of the ways for the market to catch its breath today?
You know me, Marlon. This is not like catching breath, but think about it this way: the equities are getting hammered. You had some very bad earnings reports, and typically you're seeing selling everywhere. I mean, there's really no asset class today is really safe other than crude oil, and that's no longer safe, and natural gas, which is not a good thing for our farmers and producers. So, I mean, you're seeing selling everywhere, really to cover some margin calls from the equity markets and things like that. But overall, the grain markets are just in a nice wide trading range, which should go higher, and new highs, I think, will be made across the board. And I'm talking about all-time new highs, not just new highs of the recent run-ups. I think we're going significantly higher because we have monster inflation and so many other issues to go along with it that these prices can only do anything but go up.
So do you have that same inclination on the wheat market here? Because sometimes when you get to this time of year, it can sag into harvest.
Well, wheat, I think, is going to be probably the bigger gainer of them all because, you know, when you talk about giving up 30% of the crop right off the top with Russia and Ukraine going on, that's a problem. And that's going to create a much bigger demand for our wheat going forward. So this is setting up to see much higher prices, which obviously with this inflationary problems we have could really set these things flying. And that it's good and it's bad. So I think, you know, prices are going to be higher, but they're going to be higher in the stores as well.
Okay, well, thanks for analyzing that and helping us make sense out of today's market movement. Maybe there is a silver lining here. Todd Bubba Horwitz with us. He's with BubbaTrading.com. He's based in Chicago. We'll be back in a moment. We'll analyze our livestock trade coming up next.